Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the NZD USD. And first, we'll be talking about fundamentals before we move right down and hit technicals, which is purely what we're going to be seeing on the chart. Now, we have noticed that the NZD USD holds below the 0.5650 recent resistance ahead of key US events. And the US calendar is packed for the days ahead with US CPI and FOMC minutes in focus. NZD USD is a touch higher in Asia time, printing 0.5590 and a 0.15% move from the session lows of 0.5575 as traders move in on the US dollar as US bond yields tail off from the cycle highs that were made yesterday. The sentiment is the driver as investors look ahead to this week's Federal Open Market Committee minutes and the US Consumer Price Index for clarity surrounding the outlook for the Fed. Now, volatility remains elevated, and G3 moves this week reflect nervousness and uncertainty more than anything else. Now, also, as noted yesterday, the RBNZ is doing the right thing, and New Zealand still has a shot at a soft landing, and consumers look pretty resilient, while commodity prices have been elevated. Exporters are benefiting from a lower NZD, as well as tourism is rebounding. Now, however, the FX markets remain attuned to global themes. We have FOMC minutes later today in the US session, but the key focus would be on the inflation data later in the week. Core prices likely stayed strong in September, with the series registering another large 0.5% monthly per monthly gain. And the shelter inflation likely remains strong, though we look for used vehicle prices to retreat sharply. Importantly, gas prices likely brought additional relief for the headline series again, declining by about 5% MOM. Our MOM focus implies 8.2% / 6.6% year-over-year for total core prices. Meanwhile, as for the Reserve Bank of New Zealand, the central bank still needs to do more to dampen inflation pressures, and the sentiment, of course, is a supportive factor for the Fed. Consistent with this, and we recently revised our focus for an official cash rate, and now expected to speak at a 4.5% with 50 BP hikes in both November and early February. Now that's our technical analysis, rather fundamental analysis. Moving down to technical analysis, we have in a double head with shoulder pattern at 0.56785 and nearby 0.56634. We're expecting a flush down to at least this most recent support zone of 0.56236 before touching at 0.55878. So letting our trade run up to this point, we're looking at nothing less than 30 pips. And an extension to this zone, we're looking at nothing less than 75 pips from that trade, which is good money. That's our technical analysis on today's currency pair. Now let's move over to the stock markets. Welcome back, guys. Today on the stock markets, we'll be having a look at 3M, MMM, and of the most important part, we have news events that ABL International Group has announced it entered an NFT MMM license agreement with Me Metaverse Incorporation. While also facing unprecedented legal challenges, 3M stock is just too risky to hold right about now. So what to expect from this? We have been noticing a double Moami, most likely in the books. We are looking at a support at 106.93. Most likely going to touch the support and then a bounce back to the upside following the most recent economic events on the 3M stock. So what we are expected to do at this point is to put probably a buy stop, sell limit, as well as put our TP to the upside at 116.73, which is 80 pips from that entry point, of course, which is good money. So letting our trade get to the point and probably an extension to the upside, we're looking at about 170 pips plus from that trade, of course, which is good money. That's our technical analysis on today's stock markets, 3M. I remain your host, Nick. Bye for now.